G'day investors, today is June 6, 2024. We are taking a slight deviation from our regular videos, and instead I'm going to take you through a deep dive of the trading strategy we discuss in the daily videos. I'm also assuming your trading knowledge is anywhere from beginner to advanced. In any case, I trust the instructions I'm about to go through will help you on your trading journey. Since many of you already follow the natural gas videos and the market indices, I'm going to cover both instruments using the trading strategy on the daily and the hourly timeframes. So firstly, some homework. If you follow my daily videos, you'll note I use these moving averages on both the price and the CCI, the commodity channel indicator. If you haven't already, I suggest you watch this video. The title is Multiple Moving Average on Price and CCI 150, dated to February the 21st, 2024. It's less than 9 minutes duration, so it's a small amount of time invested. So let's get started. And there's a 3-step process to trading. Step number 1, determine the trend direction to trade. Example, if you're trading on the daily, then a minimum weekly trend should be followed. Or if you're trading on the intraday, like the 1 hour, then minimum you should be trading trend will be on the daily time frame. Step 2, trade on the direction of the CCI 150 and look for a fresh breakout from the CCI moving averages. And lastly, step 3, close a trade when the CCI 150 enters the CCI 150 moving average range. As I've already stated, I'll go through the daily and hourly timeframes for both natural gas as well as the German DAX. Of course, you can apply the same process to any instruments, whether it be FOREX pairs, shares, CFDs, etc. So if you watch my daily videos, you'll be familiar with these two screens. This is the daily chart and this is the hourly chart. And we take a direction of trades on the hourly, if you're trading the intraday, in a direction of the daily. So you can see here, for example, where that CCI broke below the moving averages, you would trade that to the short side, and that happens to be, if I've got a little back test here, and that's the short positioning from that point there. This is a profitability chart, and this shows a number of contracts entered. So you would have gone short during that period, and that coincided with this break below on the daily chart. So that would have been your profitability had you gone short there. Notice here the profitability is flat, meaning there were no trades made during that bullish movement. So again, you would have made a few more points going down here, and you'd still be in you would have closed out of that position there because it crossed off over that moving average, exponential moving average 9. Also, if I go back further in history, going back to this point where it started going long, where the CCI broke above on the daily, we take long positions, and you can see there the back test. If I go back far enough, that point there, the 16th of March, coincides with that point when it broke above of the moving average range. So had you gone long during that period and followed the break above the CCI on the 1 hour chart, so long as the daily is going long during that period, you would have generated all that revenue up until that point where it starts, when it breaks into the moving average range. So you would have stopped trading at that point there, and subsequently you would have gone short, as I said, at that point there. So again, just emphasizing, you would have gone long from that point to there when it's broke, until it broke into that. Actually, you would have probably closed it out at that point, the first lot there, entered again, close out the second lot, enter there, and then the third lot, and then finally you would have closed it out there, and you would have stopped going long during that period. You would not have gone short during any of that period back there, and you would have started going short from that period, and currently we're still going short today. So that's going long on the 1 hour and going short on the 1 hour as well for natural gas. Now what I've got here, I've changed the trading time frame to the daily, and this is the weekly on natural gas. So again, going long from that point there, and you'd still be in long position if you're trading on the daily time frame. The long positions from that point there, that coincides with that break above on the weekly. So on the daily, you would have gone long there, and currently you'd be up 6,970 for a $10 contract on natural gas. And had you been going short from that point there until it broke into the moving average range, it broke into it once there, and you would have started again there. That was from the 20th of November 2023, which was that point there. You can see there that generated 16,435. So again, that's trading on the daily. Next, we've got the German DAX on the 1 hour time frame, based on the trend of the daily time frame. So again, going back here, From that point, when the CCI broke below the moving average range, you would have gone short during that period, and that starting trading would have coincided with that point back there on the 20th of May 2024. Now you'll notice in this case, because we're using stop losses, that actually stopped out. We had a few bull candles there, so each of those got stopped out. So we actually got into the negative. If the $100,000 is our baseline, so we would have gone down about what's that? Almost $2,500, roughly $2,300 in the negative. So that would have been a loss had you traded short during that period. However, had you gone long from that point on, that was the 6th of May, that coincided with that starting trading long there. You would have stopped trading long again on the same time period, around that period when you started going short. You would have stopped going long, and that generated 7,153. So that would have offset any losses you made on the short side initially. So again, it's not 100% perfect, the trading strategy, but we're using stop losses. You can actually average down, and this is a combination of averaging down and stopping after 7 contracts are entered. So let's now go to the daily and weekly trend. And lastly, on the daily trading time frame, and you're going on the direction of the weekly trend, again going long from that point when it broke above the moving average range, you would have stopped trading there, and that would have coincided going long on the hourly, making sure the daily, that's on the weekly, on the daily time frame, the CCI is above the moving average range and also above the price. You would have entered the first trade there, and you would have closed it out at that point there on the 15th of January. So that would have been about around that point there, and that generated 6,263 going long. Enter again long from that point and stop trading at that point. So entering long based on the weekly at the 22nd of January. That was back at that point there, and you would have stopped going long on the 8th of April. And the 8th of April was about there. So that up to that point, you would have stopped trading long, and that generated up to that point from that point there to that point, it generated 7,846. And then from that point down, you would have avoided going long or short until you saw that break. And that's where we are today. It's actually breaking to the downside. And today, if you're going short, you would have entered the first trade there, and you're up, slightly up at $290, going short from that point down. So hopefully that's been of help. And so with a bit of back testing showing you the results, longer time frame. And again, you could apply that to previous periods. I could have applied that going back to these periods, going short during that period, etc. On any instrument. And again, the main thing to look out for is when the higher time frame is trending long, you only take long trades on the lower time frame, and vice versa. When it's high time frames positioning on a short side, on a going down, you only take short positions on the lower time frame, whether it's daily or 1 hourly. Hopefully that's been of help. Feel free to provide any comments, feedback. Hit that like and subscribe button. Let me know how you think, and we'll see you in a future video.